Peter, thanks for joining us. Peter, what's going on the euro dollar? More Draghi refrained from coming out with any sort of, constructive sort of comments on how the euro strength is going to hurt the economy. And of course, they've also stayed away from commenting on, pulling back on that bond buying program in the eurozone.
Well, good morning, Samina. Look, and thank you for inviting me on the show. Have a look at one thing, and that's the US dollar index. It's been absolutely hammered over the last couple of trading sessions, and you're sitting now at around about 91.4. Now, that really is a very, very low number, considering what we experienced putting back to the Trump inauguration. And at Christmas time last year, you were sitting at around about 100, close on 100, and now we're sitting at 91. So it's been a monstrous sell-off, and naturally, as the US dollar comes off, everything else goes up, and that's where the euro is.
Peter, but you've seen the euro surge over 14% against the USD. Would you not now bet on a bounce back? I mean, it cannot just be a one-way move, right, on the local currency. So wouldn't it be time to bet, probably go long on the USD on expectation of a dead cat bounce, if nothing else?
You might see a dead cat bounce, but I think there's further downside. We've been saying this for a little while now, that you've probably got to see a 90 number, a 90 handle. It's at 91.36. There's every chance you could see, an 89. It just seems to be a little bit of free fall at the moment. We also have to understand that where Draghi's point of view is, and of course that there's no consensus coming out of Jackson Hole a couple of weeks ago with Janet Yellen and what the Fed prepared to do as far as lifting rates. So I think that at the present time, it seems to be a one-way traffic, though, as you know, and you've been in the markets long enough, they do bounce, and when they bounce violently. So traders have got to be very conscious as far as, stop losses and risk metrics and so on.
Peter, it seems like most people are watching out for that big policy meet that's lined up later this month. And some parts of the market have scaled back their expectation of an interest rate increase at this month's Fed meet. What is it that you're working with internally? Do you think the Fed will hike, or is it going to do a pause again?
Well, I think the jury's out on that one. I mean, it's so hard to I think, strategize or plan over. I would be erring to the side that I still believe, with inflation under control, there's not going to be a rate rise in the next 30 to 60 days. I wouldn't be surprised if they get one through by the end of the year, but I'm not even, I think it's probably a 50-50 bet at the moment. So it's very, very difficult to again forecast on, and that the market seems to be taking that into consideration with the fall and the drop of the US dollar and that dollar index. So I think that that's where the smart money is. They're shorting the dollar, and it seems to be a one-way trip at the moment.
Surprisingly, the dollar is not looking too weak against the local currency here in India. On the dollar-rupee pair, what is the trade?
Well, it seems to be very much range-bound, that 67 to 63 sort of number. I don't think you're going to see any dramatic moves to either side. I think it'll be always, in the next matter of months, it'll be pretty much range-bound in that sort of number. I don't think in a perfect world, I don't know if India needs a stronger currency, and naturally against that Indian rupee, the US dollar. It just seems to be, the reality of the whole matter is that whilst the US dollar's coming off, it's still staying in that sort of 64 range. And I don't know, I just think there'll probably be more intervention, and you'll probably stay around that number. It seems to be defying a little bit of logic compared to something like the euro or the Aussie dollar and so on.
Peter, first Hurricane Harvey and now Hurricane Irma. I mean, half of those beautiful islands in the U.S. are seeming to have been destroyed. But more importantly, what does this mean for crude and natural gas?
First off, the crude, let's see what happens over the next matter of, over the weekend, and what devastation and where exactly it hits. If it hits Florida or it hits rigs in the Gulf of Mexico, and what impact it's going to have as far as supply and supply disruptions. Crude's had a nice bounce over the last couple of days, but that could be on the back of US dollar off. And WTI is just shy of 50 now, so it's hitting that sort of number. There could be a little bit further upside. It's a pretty tough one to trade at the moment. I mean, when I say tough, it's had a nice run up. and it's probably capturing a little bit of ground that it experienced over the last, probably week and a bit. There's the geopolitical doesn't seem to be causing a great degree of concentration at the moment, and still at that 49.17, it's been a nice trade for the last 48 hours.
Right.
Be careful of it, and it's had a very strong uptick since the start of the month at $46 all the way now at 49. So maybe the best part of that move's been absorbed already, Samina.
Peter, but just chart this out for me, right? So you've got threats that North Korea currently is making. They're talking about testing another missile on Founders' Day, which is on the 9th of September. That usually is risk on, I'd imagine, or rather risk off. The dollar has always had a safe haven reputation. I somehow feel like that seems to be at stake right now, because with these rising concerns, traders are seeming to dump the dollar as opposed to pick it up. And what does that mean for crude? Because you did say that weaker prices on crude or weaker dollar is positive crude. But with the hurricanes around the corner, is the upside capped on crude, and maybe it's time to take profits off the table if you were sitting long on WTI?
Well, if you were long at 45, 46, I think it's been a glory trade since the start of the month. And that's only a week in, and you're up the best part of 8%. Now, there'll be some profit taking. If there is disruption with and the markets will be shut after tonight, naturally, for 2 days in New York. So if it's a devastation on Irma and it really leads into next week that it's all and disrupts all of that production, then I'm sure that you're going to see crude probably bounce and really it could hit 52, 53, that WTI. It all depends on the might of Irma. And then there's other storms coming into the whole, into the Gulf as well. I believe there's another 2 behind Irma, hurricanes that is. So it's a tough one at the moment. You're dealing with Mother Nature, and it can be brutal. And if you're trading Mother Nature, be very wary, because markets can be extremely volatile, Samina. I mean, crude, have a look at what gold's done. It's a glory trade at the moment, sitting at about 13.56, and it's been just dramatic. Over that month, it's nearly the best part up, $90, nearly 100 since this time last month.
So at 13.50 on gold, would you remain a buyer or recommend buy calls? Because, I mean, it's risk off globally, right?
Exactly. Well, it's sitting at 13.56. I think it's going to be a relatively good day in Asia for it. I think it'll be bid up, and I think it'll be bid up further tonight in New York. I wouldn't be surprised to take a 13.60 plus. We've been saying that for a while now, and whilst that dollar's coming off, it's very much piling into the gold market, and it seems to be just a one-way trip at the moment. So softer US. Let's see what Yellen says, but I think this month has been a very strong market for gold, and it's only going to continue. I'm not going to say where it's going to get to 1,400, but at the moment, momentum's on its side, and it seems to be, gaining day on day.
Peter, very lastly, what about base metals on the Shanghai Exchange? This morning, it's not looking too bad. Steel's trading flat, aluminium slightly lower, zinc is picking up some strength, copper is marginally off as well. How do you trade base metals right now? Any long and short calls here?
Well, you've seen that copper market. It's been a wonderful trade. It's sitting at around about that 3.15 cent per pound. It's probably got a little bit more upside there. I think you wouldn't be surprised to take, 7,000 a metric ton out fairly soon. It's pretty wild, but in considering what we've seen in the last year, Samina, we've seen just on 7,000 a metric ton all the way through to 4,500. So the market's up on mathematics. The market's up about 65% in the last 12 months for copper, and that's a big move in anyone's book. So you're probably going to see a continuation of a lot of those other base metals. The likes of nickel, of course, has had a nice run up. Aluminium, zinc, tin, they'll probably all continue. And I'd keep a close eye on the copper market, keep a close eye on iron ore and all of those in the mix. But base metals have been a very, very strong trade for 2017. They've been the standout, absolute standout.
Very lastly, Peter, I don't know if you track rubber, but that is one commodity that's been on the tear. So it's done 6 straight days of gains, looking a little quiet this morning. But what is the outlook on rubber?
Well, I don't keep a close eye on it, but I understand, you traded on TOCOM. Look, huge demand, the demand picture, it comes down to, supply and demand and what's happening as far as growing. there could be issues there, but naturally more consumption from motor vehicles, motor cars, motorbikes. So that whole storyline, and I'm sure that that's probably oversold, and now it's having a nice bounce to the upside and probably on the back of all the other base metals as well. So the commodity complex has had a nice tick up, regardless of crude oil. But, you know, the market is very, very strong, Samina. If you put your mind back to 14 and 15, we're seeing some standout numbers now, and it'll probably continue for a while. So it's not a bad place to, you know, hedge and certainly participate from a trader's perspective.